Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world one filing at a time, and sometimes things are not as they seem. Get ready because today we are diving into a filing from the Glimpse Group Incorporated, and it looks like they are planning some significant moves to raise capital. Let's peel back the layers and see what it all means. And before we dive in, if you love getting the real story behind these financial documents, make sure you are subscribed. We also have a fantastic community over on Discord, linked in the description below, where we break this stuff down even further. Alright, so what we have here is a Form 8K report for the Glimpse Group Incorporated. Think of an 8K as a current report. Its purpose is to let investors know about major events that happen between the company's bigger quarterly or annual reports. It is like a heads up that something significant has occurred. And this one, dated the 2nd of January 2026, is all about how this company plans to get more money into its coffers. The Glimpse Group Incorporated, for those who might not be familiar, is a company that deals with virtual and augmented reality technology, putting it right in the heart of a fast-growing sector. They are registered in Nevada, and their stock trades on the Nasdaq under the ticker symbol VARZA. Now, a little detail here that is important for how they can report things. The Glimpse Group has checked the box indicating they are an emerging growth company. This classification can give companies some breathing room with reporting requirements, allowing them to delay adopting new accounting standards. It is a common status for newer or smaller companies aiming for growth. So the main story here revolves around something called an at-the-market or ATM. Sales agreement, this isn't a new concept for the Glimpse Group. They first entered into this type of agreement back in July of 2025. Essentially, it is a way for a company to sell its shares directly to the public over time, usually through a financial agent without needing to do a whole new big stock offering. When they first started this, they planned to sell up to about $3 million worth of their common stock. Then in November, they revised that agreement, bumping up the maximum amount they could sell to just over $3.5 million. It shows they were looking to get a bit more funding, or perhaps they saw an opportunity to sell more shares. But the big news, the reason for this 8K filing, is what happened on the 2nd of January 2026. They have significantly increased the total amount of shares they can sell under this ATM agreement. We are talking from $3.5 million all the way up to nearly $9.5 million. That is a massive jump, more than doubling their previous target. This tells us they are really looking to raise a substantial amount of cash. This amendment, which details this big increase, is filed as an exhibit. Think of exhibits as supporting documents to the main report. It is the nitty-gritty of the deal. Here is a crucial point, and it's actually quite interesting. Despite these agreements and amendments, the filing explicitly states that no shares have been sold to date under this ATM facility. This means they have this massive capacity to sell shares, but they haven't exercised it yet. Why? It could be a few things. They might be waiting for the right market conditions. Or perhaps they are anticipating a future need for funds that has not yet materialized. Or it is possible they are just setting up this flexibility in case they need it urgently. It provides them with a valuable option. This statement is standard legal boilerplate. They're basically saying this report isn't actually selling stock right now. It is just informing the public about the company's plans. They have to be careful about how they talk about selling shares, especially before they are officially registered or allowed to be sold in certain places. One of the key exhibits, as mentioned, is Exhibit 10.1. This is the actual document, the second amendment to the sales agreement, signed on the 2nd of January 2026 between the Glimpse Group, Inc. and their sales agent, Westpark Capital Incorporated. This amendment is where all the details about that near $9.5 million increase are laid out. And then there is Exhibit 104, which is the cover page interactive data file. This is part of the newer XBRL system that the SEC uses to make financial data more easily searchable and analyzable. It is essentially the digital filing jacket. The report itself is dated the 7th of January 2026, just a few days after the amendment to the sales agreement, and it is signed by Lyron Bentavim, the Chief Executive Officer. This is standard procedure for these filings, indicating official approval from the top leadership. Now, looking at this filing, it doesn't contain detailed financial statements like a quarterly earnings report. Instead, its purpose is to announce a specific event, the significant expansion of their ATM program. This ATM facility is a strategic tool for a company like the Glimpse Group, which operates in a dynamic and potentially capital-intensive industry like VR and AR. Having access to this funding mechanism is crucial for research, development, market expansion, or even to weather any unexpected financial storms. The fact that they haven't sold any shares yet is a bit of a wild card. It means they have a powerful option in their back pocket but have chosen, at least for now, not to dilute their existing shareholders. This could be a sign of strength, showing they are not currently desperate for cash, or it could be a strategic play to wait for a more opportune moment, perhaps when their stock price is higher. Warren Buffett always emphasizes understanding what a company is and what it does, and then looking at its financials. While we don't have those detailed financials here, the strategy of setting up this large ATM facility, and so far not using it, suggests a management team that is proactively planning for future growth and potential capital needs. It signals a forward-looking approach. So, what is the big picture here? The Glimpse Group Incorporated is positioning itself for potential future funding needs by massively expanding its ability to sell stock directly to the market. While they haven't tapped into this yet, the readiness to do so, and by such a large amount, is a clear signal of their ambition and their recognition of the capital demands of the cutting-edge tech sector they operate in. It is a way to maintain financial flexibility. A key risk here, which is always present with ATM programs, is the potential for stock dilution if and when they decide to sell those shares. Too much dilution can hurt the value for existing shareholders. The opportunity, on the other hand, is the ability to quickly raise substantial funds to capitalize on market developments or strategic initiatives in the fast-moving VIAR space. It's a tool that can be both a benefit and a potential pitfall, depending on how and when it is used. Alright, that is our breakdown of the Glimpse Group's latest filing. What is your take on this increased ATM facility and its implications for the company's future? Let us know in the comments below. If this deep dive into corporate documents was valuable for you, please hit that like button and subscribe for more clear, no-nonsense analysis. And don't forget to join our growing community on Discord, linked in the description. Thanks for watching, and we'll see you in the next Decode.